All right, gents. So welcome to this week's webinar. This is going to be a quick one because I know you don't want to be here for long. But basically, what I'm going to be talking about today is some of the trades we've taken, some of the trades that we missed because that happens, and the reasons behind those trades and why I took them. So starting off quickly, we're going to jump on the Aussie CAD. So the Aussie CAD is a fairly new trading style of mine. So basically, well, let's just start from the beginning. So as you know, the way I trade is I look at the higher time frame first. So my higher time frame is the daily chart. So what I do on the daily chart is ask myself, what is the market doing? Where are the support levels? So I identified the support levels. In this case, this would be my support level. This would be one of my support levels down here. This is a major structure. This is a major support level. And before we took this trade, the market was right around this area here. So we've identified our support level. We've identified what the market is doing. Market is clearly trending down. This is your initial starting point. This is your new structure low. This is your outside return. New structure low, outside return. Probably gonna be a new structure low, but as you know, this hasn't happened yet, so we don't know what happened from this point. So, but we're predicting a new structure low, another new structure low towards this major structure, because one thing you have to realize, guys, major structure acts as a magnet. So the market would always retest major structure levels. The market wants to like find harmony, but even though it's like the most messy thing in the world, but sometimes you find that the market tends to be attracted to like the same levels in the market. So essentially what you do is you find these areas called areas of structure and you predict what the market is going to do, how the market is going to get there. So I've predicted the market is going to go down to this area here. Now I drop down to my trading time frame, and what do? So I've realized something else. So the first thing is to realize where the market is going. I've realized the market is going here. Now how is it going to get there? That's the second question. How do I take advantage of the market? So I've seen that there's a little channel forming here, not a trend line. So you've had your initial test, the market rallied off, came back, tested again, second test, rallied off. There's a third test, there's a fourth test, there's a fifth test here, if you zoom in, and there's a sixth test. And then there's a break. Now, depending on your trading style, some people will be waiting for a break and a retest, whereas some other people would just be waiting for a break. Now, I trade a break depending on what I get. I trade both depending on what I get. Now, in this case, I don't know what that is. In this case, I traded a break because this is how I trade a break. So initially, I traded a break on the higher time frame, but what I realized is that when the market moves on the higher time frame, it kind of moves too far for me to get involved. So if I was waiting for a break of this channel on the daily time frame, as you can see, this is a massive candle, and I wasn't going to take a trade here. And what I also realized is that if I took a trade on a break on the hourly chart, you have a lot of false breaks. As you can see here, this is your trend line, and this is a candle that clearly breaks this trend line, but kind of got sucked back up anyways. So a good middle that I found is to use the 4-hour chart, the 4-hour time frame. So as you can see, as this was a break on the hourly chart, and this was a break on the hourly chart, on the 4-hour chart, this is just another retest. So candle came back, poked the line, got rejected, poked it again, got rejected, poked it a third time, got rejected, and then finally you see we have a clear break and close here. Now, if you're a more conservative trader, well, this is where I entered, by the way. So I entered into this trade and now it's going fairly well. We haven't hit target yet, but it's going well. We don't know what's going to happen. I could still lose this trade, but as of right now, it's looking well. But never count your chips till it actually goes into your pocket. Now, if you are not this aggressive of a trader, what you can wait for is a break and a retest, just like we have here. You can see the market broke down, then we have a retest of this structure level. you can see we have a little minor structure level here. We have a test here, 1, 2, 3, 4, 5. Guys, I can't stress the power of structure levels enough. These are key. If you're a technical trader, you have to understand key levels of structure, minor, major structure of support and resistance levels. These are the bread and butter of any would-be technical trader. Now, each one has its own advantages. Trading it aggressively on the break and waiting for a retest. If you trade it aggressively, chances are you're gonna get quite a few false breaks, even on the 4-hour. Don't get me wrong, even though I trade this break on the 4-hour, doesn't always work. Sometimes you get a break and then the market just goes the other way. Now, if you wait for a retest, chances are you're gonna get a more cleaner entry because you actually waited for a trend in a way. So this is a new structure low, this is an outside return. Now if you drop down to the 1-hour, oh, there we go. If you drop down to the 1-hour, you can see the market had a clean break. You had all the time in the world to do your analysis. If you missed the initial entry on the break on the 4-hour, you can actually wait for a retest here to actually get into the trade again. Now, having said that, you won't always get the second chance like we do here. So that's one of the disadvantages of waiting for a retest. The market is going to break and then just run along to target, and then you'd be like, I should have taken it. But coulda, woulda, shoulda. You never make money that way. So pros and cons. Trade the best way you can. But if you're going to be a conservative trader, normally what I'd do is I'd use an indicator. Now guys, don't get me wrong, indicators are the last thing you're looking for before getting into a trade. Indicators come after the analysis. Do your technical analysis before you include any indicators. So in this case, I use what I call a relative strength index. It's like a MACD, but a little bit different. So what a relative strength index, RSI, tells you is how overbought or oversold the market is. So if the market is, say, up here, you're looking to sell, and the market is, say, above a certain level. So RSI goes from 0 to 100. The more close you are to 0, the more oversold the market is. The more close you are to 8 to 100, the more overbought the market is. Now, for me personally, I use a 20 and an 80 for oversold and overbought respectively. So in this case, because I'm looking for to sell, I'm looking for the market to be overbought. So above 80. Anything above 80 for me is overbought. So as you can see, in this retest here of the minor structure, I'm looking for the market to be oversold. Now, if you look down to the bottom left corner, you would see that the RSI is clearly above 80. Now, guys, don't get me wrong. I've done all the heavy lifting before I actually include the RSI. This is the final bit. The next thing I'm looking for is a lower low, lower close candle. A lower low, lower close candle, what is that? A lower low, lower close candle is a candle, simply means a candle that has broken and closed below the previous candle. So this is your retest. RSI is oversold. Look down bottom left. This is not a lower low, lower close candle because this candle has not broken and closed below this previous candle. This is not a lower low, lower close candle. This is not a lower low, lower close candle because, as you can see, it's clearly within this previous doji candle here. This here is a lower low, lower close candle because it has broken and it has also closed. This is the closed below the previous candle. Now guys, you can see this particular trade here, you could have attacked it in different ways. You could have waited for a break and then just jump on, or you could wait for a retest and then jump on. There is no wrong way. It just has pros and cons depending on what kind of trader you are. Aggressive, conservative, trade your style. So this is a good example of excuse me, different trading styles and how they can actually work in the market. No single trader wins every trade, and we can all have different styles in the market and still make money. So I see a lot of people going, oh, that's the wrong way to do that. I'm like, how do you know how he trades? Like, you have no idea. Don't get me wrong, there's subjective things you can do in the market that are, objectively wrong, sorry. But I mean, it just bugs me when people are like so adamant that the way they trade is the only way to trade. It's just so narcissistic. But anyways, this is a typical example of different trading styles that we can make money in the same time, in the same chart, on the same trade, basically. But anyways, on to the next one. This is a trade I sent out this morning. Actually, I posted this on my IG a few days ago. If you remember, I was asking who knows which way this is gonna break. A lot of people said it was gonna break lower, but you know, the market always never fails to disappoint or surprise. So as you can see, the market came down. I posted it when the market was here. The market came down. As you can see, the arrow actually predicted it was gonna come down. The market came down, retested, came up, and then broke. Again, just like the previous example, go on to the 4-hour. Like, the guys, don't get me wrong, before this break, I had no idea what the market was going to do. Okay, I'm not clairvoyant. I can't see the future. I had no idea. I was just waiting for one thing to happen. I was waiting for the break. If the market had broken this way, I had a plan. If it breaks this way, I have a plan. So it doesn't really matter what the market does. I have a plan to trade it. So again, just like the previous example, the market broke out right here. And yeah, that's all I need. That's my signal right there. I ask myself, okay, what's the market doing? The market has broken out of the triangle. Where is my target? Target at retest of structure up here. Where's my stop? Stop at the retest of the trend line right here. Trend lines also act as structure. Now, if the market had broken the other way, I would be asking myself the same questions. So say the market broke down this way. I'll ask myself, okay, so where is my target? Target would be down here at the retest of structure. Where is my stop loss? Stop loss would be at the retest of this structure level, this trend line here. Don't forget, trend lines act as structure. And in fact, this is actually a structure level. As you can see, a test here, test here, test here, test here, test here. This is a very strong structure level. If you go up to the daily, you can see clearly that this has been tested multiple times on the daily chart. Even if you go back further, you can see, let's just draw this back further. You can see the way the market respected this level. Even though you have a false break here, came back, kept on respecting it. So clearly something is happening here that is significant. So that's the second trade I sent through. Clearly all doing well, but we never know what's gonna happen. They haven't been closed yet. But anyways, we'll see what happens in a few days. So onto the Aussie yen. So we've been in this trade for so long, but you know, I can't even complain because we've actually taken advantage of this pair so many times. So this is basically just a channel that we've been trading back and forth, back and forth, back and forth. So I trade channels. So the way I trade is I wait for the market to come down to this level, and again I use my tools. I recognize the structure, recognize my stop loss below the structure level, my target at the retest of the structure level up here, and I ask myself, okay, now how do I enter? I know where my stop is, I know where my entry is, I know where my target is. Now what do I need to get in? All I need to get in is, again, just like on the previous example, get down to this level, you see, down here. Because I'm looking to buy, I'm looking for the market to be oversold on the RSI. So down here, below 20 is oversold. The market is at 10.78. If you look down bottom left, RSI, 10.78. Next one I'm looking for is a higher high, higher close candle. Now what is a higher high, higher close candle? Just like a lower low, lower close candle, higher high, higher close candle is simply a candle that breaks and closes above the previous candle. Since this is our oversold candle, our higher high, higher close candle comes on this green candle. Because as you can see, we have a higher high. Our high is above the previous high here, and we also have a higher close. So the close here, excuse me, there we go. The close here is clearly above the previous high of the previous candle. And simple as that. But as you can see, the market is never going to give you an easy battle. The market went up, came down, went up, came down, put us in the red for a bit, went up, came down, put us in the red again, and then finally went up, and now we are kind of in the middle. And such is the story. We've been in this trade for 49 days. Such is the life of a swing trader. But hey, you know what? Patience is the key. We could come down and get stopped at. We could go up and hit target. This is for 300 pips. So it's not easy. The market is going to test you and retest you. A lot of people will be shaken out by these fluctuations, up and down movement. But you just have to stay strong. Mentally, it's draining to come into the market every day and watch this going up and down, up and down. You're like, what the hell? But if you're going to be a trader, you have to learn how to sit on your hands. Don't mess with your trades, and you might actually succeed in the industry. But anyways, now this is a typical example of a channel that I have not traded because I didn't get all my rules of engagement engaged, essentially. So normally I'd be looking for a RSI to be, so essentially this is another consolidation, so market bouncing around these areas. So just like the previous example, I'd be looking to sell and buy it, right? Well, no, because again, just like the previous example, we don't have everything that we need. So what am I looking for at this level? I am looking for the market to be overbought, and I am looking for a lower close candle. So that's the sole reason why I put this in here. So I have not sold this market simply because I didn't get those things. Now, don't be too eager to like sell or buy a market just because it looks good. That is a remedy to blow your account. I can't tell you how many people have done that, me included, just because, oh, that looks good. I bet it's gonna go down. And then you're like, yeah, bet half my account. And then it just goes boop. Just be consistent in your analysis and learn how to sit on your hands. Don't just take trades willy-nilly just because you're bored. But yeah, this is a direct contrast of the other pair, the Aussie yen. So Aussie yen, we have RSI, we have structure, cool. We have RSI, good. We have higher close, let's go. Aussie New Zealand, we have structure, cool. We have no RSI, and we have no, well, it doesn't really matter because we have no RSI. Case closed. I don't have RSI, so anything else in there is irrelevant. Onto the Bitcoin, the big trend. Now, again, this is a market is clearly bearish. I mean, Bitcoin has taken a pounding the past few months. But now we're just kind of looking for, well, we're looking at like a trend reversal. So we've had like a new structure low, outside return, new structure low, outside return, new structure low, outside return, new structure low, outside return. Then we've kind of had like a reverse head and shoulders here. Okay, that would be your left, that would be your head and your right shoulder. Then kind of broke out, made a new structure high in a bullish sense. Then now we're kind of like coming back to retest this structure level here. Now, just like in the previous examples, this would be a structure level. Your trend line also acts as structure. This is an actual structure level. This will be a structure support because you're looking to buy. Now this is on the daily. Identify structure on the daily. Now go down to your trading time frame. You can see bottom left, RSI 17. All right, and then higher close candle right there. Boom, that's all we need, and we are in the trade. Now, if you notice, I didn't actually take the trade here. Took it a bit lower because that's when I saw the trade. You're not always going to be there to take the trade the second your signal is triggered. Okay, you're not gonna be stuck to your computer. I actually have a life. So sometimes you miss a trade. Worst thing you can do is chase a trade. But if you get a second chance to enter, mate, just take it. In this case, we got an even better entry because market was a bit lower when I actually saw this. So question you ask yourself is, okay, cool. So this is my entry. Where's my stop? Stop below structure. Stops are always below structure. Where's my target? First target is at minus structure. So you ask yourself, why did I put the first target here? If you look left, you can see structure right here. You can see structure right here. And you can see structure right here. Now, I put this first target here because in case this is a false bullish market, I don't want to have to fight the sellers. I just want to take what I can and be out. But if in the case that the bulls actually fight off the sellers here, because trust me guys, there are sellers at this level. If the market actually breaks through this level, then we go for the home run. And that is how I trade. I always look to milk the market as much as I can, but if I can't, I take what I can and I'm out. And I am out. And now on to the next one. Now we are going to move on to more channels. So this is a trade I sent through today as well. So as you can see, the market has been bouncing around this level, and finally now we broke out. You see, this is the lowest price level of this channel, this long candle here. And we broke out here. This is don't forget, this is the 4 hour. So this is the candle that actually broke us out and put us into a trade. So don't forget, in this channel, I have no idea what's going to happen. We could have broken the other way. We could have broken this way. It doesn't matter. So we've broken this way. Now my question is, okay, how do I tackle this? 3 questions. Where do I enter? Where's my target? Where's my stop loss? Okay. Now, guys, don't forget, as I said earlier, there's 2 ways the market can move. The market can either, the way it's broken through here, it can either come back, it can either go, well, let's just say the market can either go straight down to your target, or the market can come back and retest structure and then go straight down. Now, normally I would have my stops a bit further up just to protect myself, to put it above this structure level, but I'm not willing to risk this much because chances are the market's going to come back to take me out, but I'm willing to risk that much, a little bit less. 41 pips is better than 89 pips. So if the market comes back to retest before crashing down, I'm willing to risk 41 pips to make 142. Now if the market does come back, I'm just going to enter the trade again. In that case, I'm actually going to be risking less because now my target would be, my stop would be here and my entry will be somewhere around here. So I'd actually be risking something in the realm of 30 pips. Now, that's not a lot, but it adds up. That's about 10 pip difference from the original stop loss. But guys, that adds up. Those pips add up. You have to do the maths and do the testing, of course. But in this case, I'm willing to risk 43 pips to make 143. Nope. There we go. Somewhere around there. And if I get and if I get taken out, I have another chance to enter up here. Now again, stops here, targets at structure. If you have a look, you have a structure level here, a little structure shelf here. So stops always at structure, targets always at structure. Don't forget, structure acts as a magnet. Structure is key. Structure is key. Structure is key. Next one. Oh, this bad boy. So I posted this as well on my IG a few days ago. I was asking people where do they think it was going to go, and people were like no one. It was more like 50-50, and same here. I had no idea where he was gonna go. So that's why when it came down to retest here, as you can see, bottom left RSI. Okay, first we have structure, the trend line. Second we have RSI, and the third we have a higher close candle right there. So I bought this, and clearly we lost 29 pips. But then as soon as we lost, I didn't sit there and cry because I lost 29 pips. Immediately, my mentality changed, and I looked at the 4-hour. I saw a break in the candle here. Remember, we have a break in the candle on the 4-hour. So essentially, this candle, this triangle has been broken. Now that changed my analysis. That changed my mentality from buyer to seller straight away. So lost 29 pips, immediately changed to a seller, and now we are on our way to make 87 pips. So plus 87 minus 29. I'm not that good at maths, but I think I'm ahead. So again, posted on the IG a few days ago. This is the outcome. This is how you take advantage of the market. Don't marry a trade, don't marry an idea, just adapt and trade. On to the next one. This bad boy. So just like the previous one, channel break on the 4-hour right there. Now we are on our way down. You see how it's getting more and more simple. Now you ask yourself, where are we going? Well, what's your target? Structure down here. Now this is obviously like an old trade, but I just wanted to put that in there to make a point. Let's go to the coins. Yep, just another channel. We have a break. Same principle. We have a break on the 4-hour. In this case, we kind of poked his head back up, but we have a good protection on the stop here. Now, where are we going? This one particularly, go up to the daily. This one particularly, I have an open target. So an open target essentially means I've looked left. There's not much to see here. So I'm just gonna use a trailing stop on this one. Eventually we're gonna be stopped at, but question is I have no target. So each time we have a new structure low, I'm just gonna move my stop loss. We have another new structure low. So just draw this out. So essentially, this is what a trend looks like. And right now, we've entered here and we have an open target. Each time we have a new structure low, outside return, a new structure low, I'm just gonna move my stop loss to the previous new outside return. And then we have another new structure low. And then I'm gonna move my stop loss again. And I'm just gonna trail this trade. It's beautiful. Now the only time I do this is when I have a target that is so far away, or I don't have a target at all. Now guys, this is all being back tested. I don't just make this up as I go along. This is actually a trading strategy that I've actually back tested. Feel free to take it and back test it yourself, but just make sure you know what you're doing and when to use it. Okay, so New Zealand yen. You guys are currently in this trade as well. So same principle really. Broke through the trend line on the 4-hour, and now we are in the trade. What's my target? Target is the retest of the trend line here, or wherever we hit. I mean, this trend line is not, this could carry on for a bit, but wherever we hit this trend line, that is my automatic target. It's getting kind of repetitive, and it should be repetitive because that's how trading is. Should be boring. Trading should be very, very boring if you're doing it right. Now again, this is another trade. It's very similar. Trend line structure, cool. Actual structure support, cool. Now ask yourself, what else do we need? So we found our structure levels. Let's go up to the daily just to make sure, because I know that's a structure level because I've actually looked at it before this, but let's just go up to the daily. So daily, find the structure, cool. Okay, trend line, found it, check. Structure, found it, check. Down to the trading time frame. So market has come up, maybe made a new structure high. Excuse me. Now we're coming down to retest the structure level. Zoom in a little bit. What are we looking for? So we found the structure level. We found the trend line. What else do I need to enter? If you don't remember, you can rewind, and there's two more things I need here. I need the market to be oversold. So if you look down to the bottom left, below 20, we have 13.6, massively oversold. And I need a higher close candle. So this is the candle that's oversold. Oh, 4.9, perfect. We have 1, 2, 3, boom, right here. This candle is your higher close candle because we've broken and closed above the previous candle. Now that's your entry. Question: where's my stop? Below structure. Where's my target? At structure. First target is minus structure. Don't forget, I don't want to fight off any buyers or sellers. I just want to take what I can and be out. And if you notice, my target is actually a little bit below that structure level because I want to be out before any resistance actually sets in. If we manage to break through this resistance level here, my next level of structure for 210 pips is the major structure right up here. So we've taken first target. Now it doesn't look, it's not looking good for the sellers, for the buyers. It looks like the sellers indeed are pushing us down, but you know what, this is now a risk-free trade. We've taken our money, and if we hit our entry here, we will be out of this trade, and we've made money and lost nothing. So now we're just kind of like playing with house money. We're still in the trade, but we've closed half our positions, and we've moved our stops to break even. So this trade is a risk-free trade. Now, what's better than trading with house money? Nothing, because even if you lose, you don't really lose. Now for the final one. Here we go. So onto the daily. Find our structure level. Beautiful descending triangle. You find your structure levels. Cool. Go up to the trading time frame. We've had a break of the triangle, but don't forget the break on the hourly is not really that trustworthy. So let's go to the 4 hour. Oh, there's a break of the 4 hour. There's a massive bearish candle here. So this would be your entry at the break of this candle. As you can see, again, I didn't quite enter at that level because by the time I saw this trade, it was already here. But nevertheless, entry at market, stops above structure, and then target at structure. Now you might ask yourself, why is my target here? Let me just drop a line. And let's go up to the daily. Now look at this yellow line. Is there any confluence? If you look left, do you see anything? Look at that. Structure, 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 structure. So clearly something is happening here. So that would be simply be my target. Now guys, this has gone on for too long, but that's just a breakdown of what I'm looking at, what we've looked at, and how I've taken some of my trades for this week. If you find this interesting, just drop me a message. If you've got any questions, drop me a message, and I will see you guys on the next one. Trade safe.